Welcome to the OANDA Market Pulse charting analysis video. My name is Craig Erlam, Senior Market Analyst at OANDA. Now this video is going to be focused on commodities. It's Monday, which means we're going to do a weekly preview. We're going to see how the previous week finished as well and see what this means potentially for the coming days and weeks. Now firstly, once again, the risk of sounding repetitive, I do just want to highlight for those who didn't tune in for the FX video, there is a number of key economic events this week which I think people should be fully aware of when trading. Now some are going to have a bigger impact than others, and some are going to directly impact whatever you're trading while others may not. I think the most obvious couple of events stand out here is the Fed decision on Wednesday. Now there's no a change expected from the Federal Reserve, there's no press conference after, but we will get a statement released alongside the announcement which could create some volatility in the markets and could create some swings. We've seen a much more dovish ECB, and we could see a less hawkish Federal Reserve, again in response to the market turmoil at the beginning of the year, and also the decline in commodity prices. The other one is the Bank of Japan decision on Friday morning, and once again we could see a lot of volatility around this event. The difference between this and the Fed is we could actually see an easing of monetary policy from the Bank of Japan in response to what we've had so far at the start of the year. This is a country that's only just really avoided recession. It's got extremely low levels of inflation, and therefore they really do warrant further stimulus for the Japanese economy. Now people previously anticipated that it would have come prior to now, but if you add in the market volatility at the start of the year and the further decline in commodity prices, it's becoming increasingly likely that we are going to see some further stimulus. At the very least, you'd expect to see some dovish statements from the Bank of Japan, but we could see some stimulus which could have a major impact on the markets. We've also got things like GDP readings from the US on Friday, GDP from the UK on Thursday, as well as services PMIs and so on and so forth. So I just wanted to highlight these events that I think are going to be key for the markets this week. Now, pushing on with the actual technical analysis itself, because that is the point, of course, of these videos. We're going to start with gold. Now, gold again has remained kind of range driven at the moment. You can see from the weekly chart that not very much has changed. We're still trying to push above this 1100 level, which is a prior level of support and has provided some resistance more recently. Now we are still seeing a push to the upside. I think 1080 to the downside is continuing to offer some form of support. Now we need, I'll zoom in onto the daily chart here because I think this is much more clear. We are seeing these higher lows being made. We are still actually seeing lower highs as well, which of course is consolidation, but we are finding these only moderately lower highs. We are seeing this supported much more from the downside. It does look to me that we are going to see a potential break of these 1100 to 1100, 1110 levels in the coming days, at which point, if we do, to be honest, first thing I want to see is whether this is just a correction or a broader consolidation, or whether we are actually going to see a move back towards these 1190 to 1200 levels, which would coincide with these previous highs from October, and also this long-term descending trend line. But for now, I want to see if this is just a correction or not, at which point the 50 fib may offer some form of a test. Of course, these previous supports have provided a significant test for gold over the last few weeks, but the 50 fib, if we do run into resistance once again here, which is again just above those previous highs, then that may suggest that what we are just seeing is a correction in this broader trend that gold has traded within, is going to see further downward pressure being applied, at which point we could be looking back towards these previous lows around these 1070 levels, although we may run into initial support around these 1085s again, being prior resistance. Next is silver, and we are seeing a lot of upside pressure on this. So we've got this pennant setup, which we've highlighted in previous videos. We are seeing a lot of upward pressure on the pennant. We haven't had a breakout quite as yet, but you can see, especially over the last couple of days, we have seen a lot of upward pressure. Now, what was interesting on Friday was we did appear to break out, but this has just turned out to be a false breakout of the pennant. Now, it ran into resistance around this previous high, around 40 and 40, and we did actually close back inside and close lower on the day. So you can see that we are having a lot of choppy trading in silver right now, because on the only the day prior to this, we saw some strong selling, but then we saw a recovery here as well. So there does seem to be a lot of choppy trading around the core here, around 14 to 14.20. We are seeing some more upside pressure again today though, and we have nipped above at one stage, but we are still trading back inside. I need to see a close above here, and really I'd like to see these prior highs taken out if I'm going to be tempted into, if I'm going to I guess change my or not change my viewpoint on this, because I think at the moment it's hard to be bullish or overly bullish or bearish on silver right now. There does seem to be a bit of an upside bullish bias appearing, but I think if we can see these highs taken out above 14.35, we could be looking back towards these 14.65 levels, which again is this more recent high. Again, a break above here, we could be looking back towards this descending trend line, which silver has traded below for some time now. So, but the next test, of course, is 14.35, then moving on to 14.65 here, which I've just highlighted, and a break above here would certainly start to look a little bit more bullish. Copper's next, and the story hasn't really changed in copper over the past week or two. Once again, we have run into resistance around this prior support, so the prior support being $2. Of course, this is a big psychological level as well as a prior level of support. Now, we did run into resistance here. We failed to close above the prior week's opening level, so what could have potentially been a half-decent bullish engulfing pattern has actually failed at the last hurdle, and today we are seeing a little bit of downward pressure. If we take a look at the daily chart now, all of a sudden this looks more like a consolidation, maybe a rising wedge, or potentially a flag formation, rather than a reversal. This looks more like a consolidation pattern, possibly, potentially even if we get the fib retracement levels on there. This is the 38.2 Fibonacci retracement level, which again coincides with those previous support level and a key psychological level. This candle, the most recent daily candle on Friday, while we did see a rally, we did see it drop off towards the end, so we're kind of left with what resembles something like a shooting star prior to today's selling. If we can see a break of this ascending trend line from the 18th of January lows, that may suggest that we're seeing a break of this flag formation and see these 193.25 support from earlier on in January come under some pressure, with 190 below here being a logical level of support, again having which I've highlighted on previous videos, having been a key level of support previously. WTI Crude next, and last week we did see WTI pull back towards the 26.50 to 25.50 region. It did find strong support at this level, and we did see it rally into the end of the week off the back of this. So we've got a nice little hammer, or what I guess again an imperfect hammer. The body is a little bit large for a hammer. I wouldn't say that the lower wick is double the size of the body, and therefore it may be a bit of an imperfect hammer, but I guess the message really is quite similar in that we've had a strong sell-off initially earlier in the week, and not only have the bulls defended this level, but they've actually pushed it right back up above the opening levels to leave us with what appears to be a fairly bullish candle on the weekly chart. I guess we are seeing resistance around this price support now, which I'll cover more on the daily chart. But potentially, maybe on the weekly chart, this suggests that we are going to see a bit more of a correction in WTI after, let's face it, what has been a very strong bearish period here. Potentially, we could see a correction back towards this descending trend line, which has been key throughout the decline, which may coincide again with prior resistance, maybe even going as high as $37. But I guess if we see a break above these 31.50s, then we may be looking back towards 34. Now, this is a little clearer on the daily chart, of course. Here you see that this was prior support on the way down back on January 7th. That's where we've run into resistance now, where we ran into resistance previously as well. For me, I'm not necessarily convinced that the correction or this consolidation is over. I think we could, if we do see a break above here, like I say, I think this prior level of support around $34 would offer logical resistance along the way. Again, using these Fibonacci retracement levels, I mean, this current support, current resistance, prior support does coincide roughly as well with the 50% retracement of the move from these prior highs on the 4th of January to the 20th of January lows. So maybe this is why we are seeing some strong selling here. But I guess I'd like to see a move below Friday's bullish candle before I become overly bearish on WTI again. But if we do see a break below Friday's open, then I would expect to see a move back towards the 2650s, maybe even going beyond here, because I mean, in my view, and I'm sure many people will agree, the market does still feel overbearingly, well, I hate to use that word, but overbearingly bearish at this stage, and I do think we could potentially see the low 20s in WTI and Brent before we do start to see a bottom being formed. Brent Crude, of course, is telling a similar story here. We did see a sell-off back towards these $26.80, $27 levels. We did see a rally into the end of the week. Now, it looks a little bit messy on this chart, so I'm going to go straight into the daily because the weekly does look fairly bullish. I would have liked to have seen a close above the previous week's high. But what I find interesting on Brent Crude, which we didn't necessarily have perfectly on WTI, is that when we've seen a rally off these lows and into prior support, we've actually come into the 21-day simple moving average and touched the 50 fib almost perfectly before pulling back off these levels. Now, again, it's always nice to get further confirmation, but Brent, in my view, adds, I guess, a bit more comfort to maybe the more bearish view here. Now, I'm not overly confident again at the moment because I just don't think especially by comparison to more recent sell-offs, I don't think this has been quite as aggressive as we would normally see. But the fact that the 21-day simple moving average has shielded, I guess, any rallies throughout this decline over the last couple of months does add a little bit of extra comfort. But again, if we do see a move beyond here, then I think this is the most obvious next notable level of resistance around these 35.50s. Above here we could see 38.75, but to be honest, 35.50s is going to be quite a significant hurdle as far as I'm concerned, assuming of course we do actually move above this $33 level, which at the moment looks a little unlikely. I'm going to finish up with natural gas. Now, we didn't cover this last week, so I've just added it to the video for this week, and again, it'll be one we'll keep an eye on in the weeks ahead. I just find this move quite interesting, really, because we prior to the rally over the last month or so, we did see natural gas trading at multi-year lows. In fact, even when we go back all the way to the 2003 on this chart, we can't see a lower level that natural gas has traded at, which may make it a bit tricky once we move below these December lows. But for now, I think this is looking really bearish and really technically a very nice chart, because we can see from these prior high to lows, the natural gas pulled back towards a 50 back, which again coincided with previous support, previous resistance and previous support. And off of that 50 back, we saw some strong selling last week. We got this nice Maribozu candle, very bearish setup here. We are seeing some consolidation, but such a bearish move off a key fib and prior support and resistance, I think is technically a very nice setup. And just to finish that off, we've got this nice little technically nice flag formation that is now that it's experienced this consolidation, we are now trading within this flag. And the great thing about these flags is one of the ways which people can trade them is once they see the breakout of the flag itself, assuming it's in the direction of the trend, which you would ordinarily expect it to be. You can one of the benefits of this is that you can see the move prior to the flag consolidation projected lower again. Now in this case, you could look at this from one of two ways. You could look at it from maybe a more conservative way and view this most recent decline as the flagpole, which would take you from 227 back to 202, projected lower by another 25 cents. So we see a break of here, that take you back to around 180, which again which would coincide again with prior support here, prior resistance here, and support again after the breakout. So it would be a very good technical level. Alternatively, you could take the full flag here from these January 8th highs, which is around 242 back to 202. So it'd be a 40 cent move to the downside following the breakout, which would actually take us back to around 169. coinciding with those previous lows. So this could be a very technically sound setup here, assuming we do of course get the break below from what appears at this stage to be a flag setup in natural gas. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of designed to help you with your trading.